This is East Asia Tonight.
Good evening, I'm Jill Newbronner, and here are tonight's top stories from East Asia. The US strikes a trade deal with South Korea, lowering tariffs to 15% from the 25% threatened earlier. And that leaves China and Taiwan in the region yet to reach an agreement as the deadline looms. Nvidia entangled in trade tensions between Beijing and Washington once again. Chinese authorities summoned company reps over what they call serious security issues related to its H20 chips. A U.S. export controls of shipments of AI chips to China hit Samsung hard. Quarterly operating profit for its semiconductor business plummets 94%. China backs Myanmar's government efforts to resolve its civil war as the country lifts its state of emergency for the first time, ramping up plans for an election within 6 months. Ahead on East Asia Tonight, Hong Kong will see a new stablecoin legislation take effect Friday to eventually allow cross-border payments to be made almost instantly using the crypto assets, while strengthening consumer protection at the same time. We're looking at how that shapes up the financial hub's crypto landscape. Seoul and Washington have struck a trade deal, both sides agreeing to cut tariffs on U.S. imports from South Korea to 15%. Now, that's less than the 25% U.S. President Donald Trump had threatened to impose. South Korean President Lee Jae-myung called the deal a major diplomatic achievement for the export-driven economy. CNA's Im Young-suk has more from Seoul.
South Koreans woke up Thursday morning to the news that Seoul and Washington had reached a deal, allowing South Korea's products, including auto exports, to face a 15% tariff, down from 25%. The presidential office was quick to give a media briefing in the morning. It said the most remarkable outcome of the deal was a shipbuilding cooperation package.
한미 조선협력펀드 1,500억 불은 선박 건조, MRO, 조선 기자재 등 조선업 생태계 전반을 포괄하며 우리 기업들의 수요에 기반해 구체적 프로젝트에 투자될 예정입니다.
Analysts in Seoul say South Korea is well positioned to propose cooperation in the sector, where few countries have the expertise or scale to help revive the U.S. shipbuilding industry. Once a global leader, South Korea is now second after China in this industry. Under the deal, South Korea agreed to make a $350 billion investment in the U.S. and also purchase $100 billion worth of liquefied natural gas. Mr. Kim also confirmed that there would be no further opening up of its rice and beef markets.
미국과의 협의 과정에서 우리 농축산물 시장 개방에 대한 강한 요구가 있었던 것이 사실입니다. 그러나 식량 안보와 우리 농업의 민감성을 감안해 국내 쌀과 쇠고기 시장은 추가 개방하지 않는 것으로 합의하였습니다.
Still, it remains unclear if South Korea agreed to open up some of its other agricultural markets. Some 30 labor and farm activists held a rally outside the U.S. Embassy in Seoul on Thursday, saying the deal was somewhat unfair.
한국은 미국과 한미 FTA를 맺고 있고 양국은 상호 관세를 0% 가깝게 다가서고 이러한 상황에서 미국은 일방적으로 한국에서 15% 관세와 함께 자동차에도 15% 관세를 부과한다는 부당하기 짝이 없는 행보를 지속하고 있다.
Many South Koreans are waiting for further details and will be watching closely to see what comes out of a planned summit meeting between the leaders of the two countries set to take place in Washington within 2 weeks. Lim Young-suk, CNA, Seoul.
So, how are markets reacting to the trade deal? Well, Roland Lim joins us now to tell us.
Thanks, Jill. Now, there was muted response to the U.S.-South Korea trade deal, but some analysts say that the share falls may have been driven by profit-taking as news of the tariffs was already factored in. South Korean shares erased early gains to end lower for the day. Shares of automakers Hyundai and Kia fell 4.5%. and 7.3% respectively. The new tariff rate of 15% erased the 2.5% advantage in tariffs that South Korean automakers had enjoyed over Japanese rivals under a free trade agreement. Declines in automakers outweighing a rally among shipbuilders. Hanwha Ocean jumping 13.4% to its highest level in almost a decade on optimism around a shipbuilding cooperation package. Looking at the broader tariff picture across the region, perhaps the most prominent of the trade negotiations, there's still no deal between China and the US. The world's second biggest economy was firmly in Trump's trade crosshairs from the moment he took office. The two sides agreed in May to pause some tariffs, with Washington cutting the extra tariffs it imposed on Chinese imports to 30% from 145%. Under the truce, China slashed its duties on U.S. imports from 125% to 10%. A Xinhua commentary says that China has been sincere in consultations with the U.S., but it says some structural problems in China-U.S. trade relations cannot be solved overnight. Meanwhile, Taiwan says it has reached a, quote, a certain consensus with the U.S., including non-tariff trade barriers. But Taipei has yet to provide details on the agreed levy. Japan is resting easy after striking a deal with its ally, the U.S. Now, Tokyo has seen its tariff rate cut to 15% from 25% last week. The agreement is expected to reduce the tariff impact on the Japanese auto sector. But analysts say there are still reasons for caution, as higher U.S. levies will still weigh on the country's exports. And we've got lots to unpack. Who better than Amit Tendu-Palit? He is the Trade and Economics Research Lead at the Institute of South Asian Studies at the National University of Singapore. Mr. Palit, good to have you on the show. Now, with these new U.S. tariffs hitting major Asian economy exporters, which industries in your mind are likely to feel the biggest pinch?
Thank you so much, Ronald, for having me on the show. I think we are getting to see such a wide flurry of announcements coming out of the United States and divided in various categories. While we are looking at country-specific tariffs, let's not forget the fact that there were sector-specific tariffs which were announced earlier on steel, aluminium, automobiles. We have also had proclamations coming out on copper tariffs. And I think today we have reached a situation when, as we are getting closer and closer to the 1st August deadline, there's something that's becoming very clear, that Asia clearly is one of the highest affected regions as a result of these trade restrictions. And if I could make it a little more nuanced, within Asia, there are economies which really are dependent on the US market for their exports much more critically than others. And one of them, for example, is Vietnam. Nearly a quarter of Vietnam's exports are meant for the US market. If we look at an economy like Malaysia or even Thailand, significant parts of their exports. Now, these are spread across sectors, but I think if I'm able to take a broad look at this, as you checked, Roland, I think the first group which is going to be impacted is machinery, electrical machinery, mechanical appliances, because these are hugely exported to the United States from the East Asia and the surrounding countries. When we look at economies like Japan and Korea, I think the biggest concern has been over automobile exports. We also must not forget the fact that electronics exports are very important from East Asia to the United States. So are textiles, and so also are pharmaceuticals. So I think across the board, there are a wide range of exports, mostly manufacturing, mostly industrial items, which are really going to feel the pinch upon entering the US market once the tariffs hit in.
Now, Mr. Palit, it's Jill here. And earlier in our story, we talked about how some of the effects have already been perhaps built in to the economies from these tariffs. But I'm looking at long term. Long term, do you see shifts in global supply chains, perhaps even a decoupling from China, fragmentation of the Asia trade networks even?
Jill, I think there's something which is quite interesting shaping up in this. And if we look at the way the negotiations are going on between the United States and China, it's not very clear as to where eventually the tariffs will hit a baseline as far as these negotiations are concerned. As of now, there is a truce. And if I take this as the baseline, the United States tariffs on China are somewhere at around 30%, 20% plus 10%. Now, if we look at the 30% number, that 30% number is not too high with respect to the numbers that a large number of economies in Asia have been hit with. We don't even know till now what the tariffs will be for Malaysia. We don't know what the tariffs will be for Taiwan. We don't exactly know where the Thailand deal is going to go. So I think there is a peculiar supply chain orientation that is going to happen. Earlier in the first phase of the US-China trade war, we saw a situation when, because of these bilateral tariffs, a lot of production was shifted out of the mainland China to economies like Vietnam and Indonesia, and even further westward to Mexico, from where products wanted to get access to the US market because of lower tariffs. Now, that situation is changing rapidly. If the differentials between Chinese tariffs and other country tariffs reduce. So we might actually get to see this entire supply chain trajectory through what we broadly call connector economies or transshipment economies going to undergo a fundamental change, because let's not forget, the United States is going to bring in tariffs on transshipment as well, which will be in an effort to curb the rerouting of goods from China through other economies to the US. So I think there's going to be a fundamental shift in supply chains that we are going to see over the next 3 to 6 months.
And many of these Asian economies in the region that haven't been able to secure a deal at all, I mean, are they just stuck with higher tariffs for now? I mean, do they have any bargaining power left?
Well, that's a $1 million question, Roland, because I can share with you the way it is going with a country like India, which is inching very close to the 31st July deadline, and it's been put on a 25% tariff plus additional penalties. But there are other prominent economies from the region. Taiwan, for example, we don't exactly know what will be the tariff on that. We just got a napkin deal sometime earlier today for South Korea, which is 15%. But the point to be noted, Roland, is that if you look at economies like Japan and Korea, which have been able to settle deals with the United States, let's not forget the fact that they already had existing free trade agreements with the US, as a result of which there were almost non-existent tariffs in place for a large number of exports from these countries going to the US. So the situation gets distinctly worse off for them when they get these new tariffs, even if they are at the baseline level of 15%, which seems to be the new normal as far as the trap tariffs are concerned now. So I think this is what countries are slowly beginning to accept in Asia, that the best deal that you can get is 15%, combined with the fact that there are extensive purchase commitments that are to be made by the recipient countries, if not big investments like the one that Japan has committed, $550 billion. So I think it's not just the tariffs, there's much more which the countries are having to give up by way of concessions.
Appreciate those insights, but we've run out of time. That was Amitendu Palit, Trade and Economics Research Lead at the Institute of South Asian Studies, National University of Singapore.
President Trump, meanwhile, has signed an executive order to suspend the country's de minimis rule from the 29th of August. But what does de minimis do? Well, it is an exemption that allows low-cost commercial shipments to be shipped to the US without incurring tariffs. The value often differs from country to country. The US has had set $800 for nearly a decade until Mr. Trump's announcement. Now, Washington, in its earlier move to target small packages from China and Hong Kong, had accused Beijing of deceptive shipping practices to take advantage of the loophole, which it says allows Chinese e-commerce giants such as Shein and Temu to edge American retailers out of the market. The president also argues that the free flow of small packages into the US has allowed deadly drugs, especially fentanyl, and the chemicals used to make it to arrive in the country unchecked. And let's say consumers are likely to shoulder new higher prices on top of sweeping tariffs when the de minimis exemption is suspended next month. Coming up in East Asia tonight, the Bank of Japan optimistic that a trade deal with the US would help the economy avert a steep downturn as it keeps interest rates steady. And Stanchart posts better than expected second quarter earnings as its wealth business benefits from the Trump-induced global volatility. Welcome back on this very heavy business news day. Roland Lim joins us again. And Roland, Nvidia, very happy that Washington was planning to remove trade restrictions for the Chinese market, but that's gone out the window, hasn't it?
Yeah, that's right, Jill. The American chip giant finds itself in the receiving end, or at the receiving end, I should say, of the trade rivalry between the US and China once again. The US chip giant Nvidia has been summoned by Chinese authorities to discuss what they call serious security issues with some of its H20 AI chips. Chinese authorities are accusing the US of equipping the chips with a, quote, tracking and positioning function. State Cyberspace Administration says it has asked Nvidia to explain the risks in order to maintain the network security and data security of Chinese users. Nvidia has been in the crosshairs of US-China relations. The move comes shortly after the US this month reversed an April ban on Nvidia selling the H20 chip to China, dealing a blow to the American firm looking to revive sales in China. The company developed the H20 chip specifically for the Chinese market after the US imposed export restrictions on advanced AI chips back in late 2023. Now, some market analysts suggest Nvidia chips are now dispensable for China and that Beijing has more courage and domestic substitution capabilities as compared to previous years, not to rely on overseas technology. Nvidia has not issued any statement on this so far. South Korea's tech heavyweight Samsung Electronics has posted a sharp drop in second quarter profits as it scrambled to capture AI demand. The memory chip and smartphone maker reported an operating profit of about $3.4 billion for the quarter ending June, missing estimates. And that marks a steep decline of some 55% on year. Operating profit for its chip business plummeted 94%, hit by US restrictions on advanced AI chips to China. A total revenue edging up marginally to $54 billion for the quarter. Now, Samsung has fallen behind its competitors like SK Hynix and Micron in high bandwidth memory chips, but it has secured a $16.5 billion deal with Tesla to provide next generation AI 6 chips for the EV maker. Now, looking ahead, the chip maker projects that its AI demand will remain robust in the second half of the year, and its foundry will ramp up production of new mobile chips in the following months. Samsung says a trade deal between South Korea and Washington will also help to alleviate business uncertainty. Samsung shares closing about 1.65% under for the day, but they have been rallying this past week on the back of that Tesla deal, garnering more than 33% year to date. Now, Standard Chartered has announced a fresh round of share buyback, this time worth some $1.3 billion after the lender reported better than expected second quarter earnings, despite the tariff impact from the US. Standard Chartered will be repurchasing its stock as part of its target to return some $8 billion back to shareholders by the end of next year. It previously announced a $1.5 billion buyback in February. On the earnings front, pre-tax profit for the March to June period came in at $2.4 billion, and that's up 44% compared to a year earlier. And this was largely due to growth in operating income, which jumped 31% on year to $2.8 billion. Strong returns in wealth management and global markets boosted revenue for the bank. Wealthy clients plowed a record $16 billion of new money in the second quarter. CEO Bill Winter says the growth was thanks to a focus on cross-border banking and affluent clients, while also keeping costs low. Standard Chartered, however, will be keeping its key performance targets unchanged, citing a further fallout from the ongoing trade wars. Despite the share buyback announcement, shares in Hong Kong fell more than 1% for the day. In London, shares are currently up 0.5%. The Bank of Japan has kept interest rate settings steady and raised its inflation forecast for the current fiscal year. The policymakers signaling cautious optimism that a trade deal with the US would help the economy avert a steep downturn. The central bank target of 0.5% for short-term rates will remain in place as expected. The BOJ said economic risks are skewed on the downside for this year and next. The BOJ governor hinting at more rate hikes going forward if the economy and inflation moves in line with its forecasts. The central bank raised its inflation forecast for the year. It now sees core inflation rising 2.7% as compared to 2.2% previously estimated. The BOJ's decision comes a week after Tokyo secured a trade deal with Washington that imposed a 15% tariff on Japanese goods. Now, that's expected to reduce the tariff impact on the Japanese auto sector. But analysts say there are still reasons for caution. For one, higher U.S. levies will still weigh on the country's exports. Political risks tied to Prime Minister Shigeru Ishiba's weakened mandate is another complication for the BOJ's rate hiking plans. Quick check on the Japanese markets. The yen is currently weaker against the greenback, 149.88, changing hands with $1. The benchmark Nikkei 225 ending in the green by more than 1%. The BOJ decision comes just hours after the U.S. Federal Reserve kept interest rates at their current levels of 4.25% to 4.5%, continuing to defy pressure from President Trump for immediate cuts. Now, that marks the fifth straight meeting that the U.S. Central Bank held interest rates steady. Chair Jerome Powell said that there are still many uncertainties left to resolve for the central bank to begin loosening its grip on the economy. And that includes downside risks from higher tariff rates and tougher immigration laws.
Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen.
The Fed officials downgraded their view of the U.S. economy, saying in their statement that it had, quote, moderated during the first half of the year. Well, this was less robust than the solid growth that they described in their last meeting in June. But the Fed was divided over the potential impact of President Trump's tariffs on U.S. growth. The Fed governors, Michelle Bowman and Christopher Waller, dissented from the majority, saying that the Fed should have cut by 25 basis points instead. It marked the first time in more than 30 years that two governors formally objected to a rate decision. Mr. Waller said earlier this month that the Fed should not wait until labor markets deteriorate before easing policy. With Singapore keeping its policy stance unchanged yesterday and South Korea expected to take a similar stance next month, well, Tiger Fund Management's Jeremy Tan explains whether Asian central banks have room to maneuver when it comes to monetary policy.
I think that if you look at overall global central banks, including Japan, even EU, I think they have kind of paused on the overall rate cut moment, the easing cycle, even for Singapore as well. I think they really want to look at, in fact, more in terms of what this tariff uncertainty will play out in the future, given that all these tariffs will cause more inflationary pressures, especially looking at Japan right now. Japan, from the last decade right now, is coming into a reflationary cycle. I think the Bank of Japan just really wants to look at whether the perhaps whether inflation continues to tick up from here before they make the policy decisions. Right now, there is still some room for the Asian monetary policy. In fact, some of them are actually still continuing on the easing cycle. I mean, looking at the ASEAN economies, looking at China, looking at Malaysia, Indonesia, Thailand. I think some of these countries are really still on the easing cycle.
And I'll be back with more business news a little later on.
Appreciate that, Roland. Thank you so much. Coming up on East Asia Tonight, Myanmar's state of emergency in place since the coup in 2021 has been lifted. China hails the move, saying it backs the Myanmar government's peaceful resolution of its civil war. And the death toll in Beijing rising after extreme downpours lashed the Chinese capital. You are with East Asia Tonight, and here are the headlines we're following. South Korea strikes a new tariff deal with the US, and the magic number, 15%. President Lee Jae-myung calls it a major achievement. Myanmar lifts a state of emergency to pave the way for elections. China hails the move, saying it wants to support peace talks that meet the needs of all parties. And Chinese authorities summon US chipmaker Nvidia over alleged security issues with its artificial intelligence technology. China has hailed Myanmar's move to lift its state of emergency, saying it supports the government's peaceful resolution of its civil war. The war-torn country has been in a state of emergency since 2021. Beijing says it is willing to promote peace talks that are in line with the needs of all parties in Myanmar. The military government says elections will be held within 6 months without setting a date. Army Chief Min Aung Hlaing also announced the formation of a union government that's to be led by his aide Nyo So as Prime Minister. The general also created a new body and a role for himself. He'll lead a commission that deals with the country's national security and peace. It is a role higher than the state councillor, and that's the position of Aung San Suu Kyi, who remains in detention. This all means, even though the state of emergency is lifted, the army chief remains in charge of the country. Earlier, he had rolled out new laws to prevent people from disrupting elections. Liang Wai-kit looks at what's next for the country.
Myanmar's been in a state of emergency since the February 1st, 2021 coup. Now, that emergency has been extended multiple times, each time with the military citing legality under the country's constitution. That's the 2008 constitution, drafted by the military itself. It's the same constitution that ousted State Councillor Aung San Suu Kyi once tried to amend before she was removed from power. Despite condemnation from the Myanmar people and the world, the junta insists its actions are lawful and justified. Now, this reveals a key aspect of how it sees the world. One, it marches to its own beat by following its own rules. Two, it believes those rules are rooted in reason. Take the 5-point consensus. In April 2021, Army Chief Min Aung Hlaing agreed with ASEAN leaders that this framework would guide the crisis response. But soon after, the army backed away from those commitments. It introduced its own framework, the 5-point peace plan, with a focus on holding elections and restoring order, but on its terms. So, in its eyes, the army is working towards peace, just not the ASEAN version of it. This mindset informs how the State Administration Council, or SAC, views the upcoming elections.
The SAC's projected elections as an exit ramp of sorts. And that is tied with, I think, bringing up past parallels of viewing elections as this transition or, exit ramp for the military towards some kind of civilianized administration. But, researchers, analysts have been commenting and cautioning that what happened with the 2010 elections and the transition that happened afterwards is not something that's directly replicable in the current situation in 2025.
As of now, it's clear the conditions aren't ripe for elections. Myanmar remains in armed conflict. Reports suggest the military controls less than half of the country. And there's still the possibility that the elections, already delayed, could be postponed again.
And of course, if you hark back to statements by the State Administration Council since 2021, elections were sort of set or proposed for 1 year after the military seized power. So that was in 2021. So 1 year meant 2022. Then it became pushed back to 2023 and so on and so forth. So I think that's also something that we need to bear in mind.
ASEAN still does not have a unified position on Myanmar's planned polls. There is no confirmation on whether the bloc will send an election observer to the country if the polls were to be held. There is also no official way to assess whether a vote is free or fair, especially if only parts of the country participate. Earlier, I spoke with one Myanmar expert who has a different take on the elections.
Another question that people are concerning is whether the election will worsen the conflict on the ground. I say not necessarily, because we are already at the full-fledged civil war. The intensity of the conflict and the quantitative ways are not going to change.
So here's what we're looking at. The polls, if held, will be seen by the army as a way out of the crisis. The military's narrative is based on rules and rationality, at least in its own view. But this raises a key question. How will Myanmar's immediate neighbors, China, Thailand, as well as regional actors like ASEAN respond? Will they see the Myanmar army's quest for legitimacy as a bridge to progress or a barrier to democracy? Leung Wai Kit, CNA.
So the move to end the state of emergency comes also as the Myanmar military government passed a new law targeting election critics. It mandates prison or even death for those who criticize a protest against planned elections set for the end of this year. The bill forbids any speech organizing, inciting, protesting, or distributing of leaflets that would harm the electoral process. Individuals convicted could be jailed for 3 to 7 years, while convicted groups could see jail time of between 5 and 10 years. It's a maximum sentence of 20 years for those who damage ballot papers and polling stations or intimidate and harm voters, candidates, or election workers. And if anyone is killed during an attempt to disrupt the election, the law says everyone involved in the crime faces the death penalty. Opposition groups are planning to boycott the polls, calling it a ploy to legitimize the military's rule. The UN Special Rapporteur on Human Rights in Myanmar has joined the call for the international community to reject the election plan. Tom Andrews also criticized the US decision to lift sanctions on Myanmar's military government as unconscionable. Those sanctions were lifted after the junta sent a glowing letter of praise to President Trump earlier this month. Let's check on some other news now. The FBI has opened a standalone New Zealand office. And one reason for that, its director says, is to improve the US and New Zealand's ability to counter China in the Pacific. FBI Director Kash Patel said the two countries work on some of the most important global issues of our times, including, he said, countering the Communist Party of China, the narcotics trade, and cyber intrusions. The FBI has had a sub-office in New Zealand since 2017, and the two countries work closely on policing child exploitation and organized crime. The US and New Zealand also members of the intelligence sharing partnership known as Five Eyes. South Korea's defense chief had his first phone call with the US Defense Secretary Pete Hegseth, both agreeing to boost their so-called extended deterrence against North Korea. Extended deterrence refers to America's commitment to using its full range of military capabilities, including nuclear weapons, to defend Seoul if it comes under attack. According to Yonhap News, South Korean's An Gyu-bak told his U.S. counterpart that North Korea's growing nuclear and missile programs, along with changing international security conditions, are key challenges Seoul faces. Both sides also agreeing to modernize their alliance in a mutually beneficial way and expand cooperation in shipbuilding, science, and technology. The two men also agreed to meet at the earliest possible date. Well, the death toll from heavy rains in Beijing has climbed to 44, with 9 others still missing. Downpours have lashed the Chinese capital and surrounding regions since last week, pouring a year's worth of rain in some areas, triggering flash floods and landslides. Beijing authorities say the deluge has affected more than 300,000 people. They admitted the capital's disaster preparation was not enough and that infrastructure in its mountainous regions had shortcomings. And most of the earlier reported deaths occurred in the hilly Miyun district. Beijing says it is ramping up recovery efforts to restore power, clear roads, and deliver essential supplies to displaced residents. Now, just outside the capital in Chengde, Hebei province, floods and landslides have killed at least 8 people, with 18 still unaccounted for. Rescue efforts are underway to find the missing. The deaths in Chengde occurred in villages that border Beijing's Miyun district, near the largest reservoir in northern China. At the same time, Chongqing in southwest China is sweltering under a heat wave. Temperatures hit a high of 41 degrees Celsius today and could go up to 43 degrees over the weekend. Residents have taken to cooling off underground in the city's subway.
区别很大，现在40几度，这里很凉快，真的是很凉快。这些市民也知道的话，全部都要过来。
Millions of people are being allowed to return to their homes after yesterday's massive earthquake off Russia's far east coast. The 8.8 magnitude quake triggered tsunamis and warnings across the Pacific, forcing widespread evacuations. The waves struck the coast of Russia, Japan, Hawaii, all the way south to Easter Island and even French Polynesia. But no major damage was reported. Hawaii recorded waves of up to 1.7 meters, while those impacting Japan reached up to 1.3 meters. Japan has lifted all its tsunami advisories that were in place for huge swathes of its Pacific coast. The nation suffered at least 1 evacuation-related death yesterday, and automakers Toyota and Nissan have halted some of their domestic production due to the situation, with Toyota saying its supply chain has been disrupted.
ロシア北の方だったのが太平洋に来るんだなっていうのを結構びっくりはしたんですけど。
A little bit shocked because I heard that they also like increased like the magnitude scale of the earthquake from like 8 point something to like 8.8 eventually. Yeah, so I was quite shocked.
Well, the southern Chinese city of Foshan has activated a week-long campaign against mosquitoes, to battle the growing number of chikungunya fever cases. More than 30 towns in Foshan city are taking part in the campaign to cut transmission routes of the disease. They're conducting outdoor disinfection and encouraging residents to eliminate mosquitoes indoors. Officials say the focus is on areas that reported 10 or more cases within the week. Meanwhile, America's Centers for Disease Control and Prevention says it plans to issue a travel notice for China in view of rising chikungunya infections. A Bloomberg report says the CDC is assessing the size and extent of the outbreak in Guangdong. Still ahead on East Asia tonight, Hong Kong prepares to launch a licensing system for the less volatile type of cryptocurrency. But authorities warn against overplaying its future role in financial systems. All right, we now bring back Roland Lim to tell us more on the day's business news, particularly what I was telling our viewers about a little earlier, Roland, and that's Hong Kong's push with its plans to launch a licensing system for what it's calling a less volatile type of cryptocurrency. What's that about?
Thanks, Jill. Yes, that's right. Hong Kong's stablecoin regulations takes effect tomorrow, part of a push to position itself as an Asian crypto hub. More on that in a bit, but first, Chinese investment banks shifting their focus from the typical domestic market to Southeast Asia. This in a bid to support outbound investments and deepen regional economic ties. A state-backed China International Capital Corporation, or CIIC, and China Galaxy Securities are planning to launch funds of more than $1 billion, seeking to expand in the lucrative space amid a U.S. tariff war. The firms will launch their investment funds over the next year and a half. China Galaxy will target high-growth sectors such as healthcare and artificial intelligence to ease investment and capital flows between China and the region. The private equity investment arm of China International Capital says it is partnering with Malaysia's Digital Economy Ministry and also financing the Malaysian gaming sector. The pivot to Southeast Asia comes as part of a broader China plus N strategy addressing growing calls by Beijing to diversify supply chains in the region. This against the backdrop of Washington's tariffs on China and Chinese companies in the region. China is Southeast Asia's biggest trading partner, with annual two-way trade rising 12% on year to $982 billion in 2024. Now, Panama has filed 2 lawsuits to scrap a contract that allows a CK Hutchison-controlled company to operate ports near the Panama Canal. The Central American country's Comptroller General, Arnel Flores, says the suits were to declare the contract unconstitutional and to also nullify the agreement to operate the Balboa and Cristobal ports. It is now up to the Panama Supreme Court to decide if it would hear the complaints. The lawsuits follows a months-long audit spearheaded by Mr. Flores, who had said that the contract does not serve his nation's interests. The full audit has not been made public, but the comptroller said that it has revealed, quote, many irregularities. This lawsuit could potentially hinder a planned deal by a consortium to buy out a good portion of CK Hutchison's global port businesses. The Hong Kong-based firm owns a 90% stake in the local Panama Ports Company, which had a concession to run the ports for 25 years, renewed in 2021. The move by CK Hutchison to sell its stake has faced pressure from both China and the U.S. It has also been reported that Chinese shipping giant COSCO may be brought into the deal. Hong Kong, which is positioning itself as a crypto-friendly hub, is crafting a regulatory regime for fiat-backed stablecoins. The new legislation will kick in tomorrow. Issued by private firms on public blockchains and pegged to real money, stablecoins are seen as a game changer for global payments. Under the new law, Hong Kong will establish a licensing system for stablecoins, reference to the Hong Kong dollar. A new guideline lays out the operational, financial, and governance standards that licensees are expected to meet. Authorities said the first batch of Hong Kong stablecoin issuer licenses expected to be granted early next year. Hong Kong joins a growing list of economies, including Singapore and Japan, that are regulating for stablecoin integration. The Monetary Authority of Singapore introduced a regulatory framework in 2023, and Japan's regulations came into effect in June 2023 as well. The country's upper house last month passed the Revised Payment Services Act, or PSA. Now, it aims to put crypto assets under the scope of a regulatory framework that is applicable to traditional financial products. At the same time, the U.S. has passed a bill to create a regulatory framework. The bill, dubbed the Genius Act, now needs to be passed by the House of Representatives before it heads to President Trump's desk for approval. Meanwhile, Hong Kong's new ordinance has helped pique investor interest, reportedly driving the market value of over 20 stablecoin-related stocks up by $45.5 billion since the start of this year. CNA's Mei Wong breaks down what's at stake for the city.
According to McKinsey, stablecoins currently process less than 1% of the global daily money transfer volume. But if the rate of growth seen in the last 4 years continues, the consultancy said stablecoin transactions could surpass legacy payment volumes in less than a decade. And Hong Kong is positioning itself at the forefront of that growth with the stablecoins legislation.
This is a really exciting part part of the new financial infrastructure over the next 5 to 10 years. This will bring companies who want to innovate to Hong Kong because they can see that Hong Kong is a place that wants this type of new technology and is supporting it.
To provide regulatory certainty for dollar-backed stablecoins.
Stablecoins, a form of digital cash issued as tokens on a blockchain, are typically backed by cash or government bonds. Operating on blockchain networks means settlements of cross-border payments with stablecoins can be done almost instantly. Advocates said that along with other benefits such as greater stability and lower costs, stablecoins also offer real use cases.
In Hong Kong setting, is also favored by the fact that there is quite a population of expatriates, quite a population of trading companies which require international remittance. And one of the major use case or advantage of stablecoin or cryptocurrency is in terms of international payment. And it's much more efficient than the traditional payment gateway. That will be the main testing stone or initial testing stone for stablecoin in Hong Kong.
Some analysts said the development of stablecoins in Hong Kong could potentially advance China's strategic goals of yuan internationalization and bolster its national security interests.
If a Hong Kong dollar, also called CNH peg markets develops, it could actually provide an alternatives for payment settlement offshore as compared to the SWIFT. A lot of trades have been settled with that, but when it comes to geopolitical, there will be a sanction from the US on this particular route of payment, which slows things down. But with the stablecoin market being developed here in Hong Kong, it could help. With the cross-border payment, transactions volume would be kept even with the geopolitical risk.
With the new regulation in place, the market will be watching closely which institutions will be licensed to issue stable coins, with banks, internet and fintech companies seen as likely candidates. The Hong Kong government believes its open model approach will entice a variety of global institutions to want to issue stable coins here in the city. The administration says it'll also help to enhance the city's liquidity and competitiveness while building on Hong Kong's hopes to cement its reputation as a leading international digital asset hub. May Wong, CNA, Hong Kong.
Asia Tonight's coming up just a little later. Here are some of the stories that they're covering for you. Dozens of countries are still racing to beat the US tariff deadline tomorrow. Thailand's finance minister says it's a work in progress. Malaysia hoping to win concessions and ward off its 25% duties. Prime Minister Anwar Ibrahim reassuring Parliament as he lays out the country's priorities for the next 5 years. But Canada stumbling at crunch time, its support for Palestinian statehood angering the US president. And those stories and more, like I said, on Asia Tonight. That's at 8 p.m. Singapore, Hong Kong time here on CNA. So that's Thursday's edition of East Asia Tonight. Don't forget your headlines at cna.asia, Facebook and YouTube. I'll see you again tomorrow. Bye-bye.